What's up, guys? It's Rey-Jay back with another video, and in this one I want to break down what's happening with SPY, Tsla, Nvda, the QQQ, and a couple of other tickers. I'm also going to talk about why tomorrow is going to be another interesting day, as the market made a nice move to the upside after CPI just came out. So I'll talk about what the chart suggests from this point on. But just know that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $2,000 more, you're guaranteed 30 in total, not to mention 8.1% APY on invested cash. This offer has been extended until the end of March, so please check it out before they run out. Anyways, now let's talk about what's happening with the market. So as far as SPY is going, okay, we formed a nice double bottom bullish divergence structure, and we saw this thing see a very, very nice bounce after CPI came out. Now, despite the fact that we pushed up like this, I want to say that we do have this trend line of resistance that's going to be tested very soon. And if SPY manages to break past this, we will continue to pump a lot higher. The same thing was going on with the broader markets. The QQQ was up 2.3%. Tesla was up 8%. The majority of stocks were in the green. So far, the bulls have a bigger edge. But the question is, why did the market pump the way it did and what's going to happen moving forward? I'll talk about all of that over the next couple of minutes. So for today, as you guys could see, Nvda was in the green. So was Apple, Microsoft, Google, Amazon, Tesla, and the list goes on. The majority of sectors were in the green, especially in finance, looking at tech and all these other consumer durables out there. The market held up very, very nicely, and it really likes this CPI report. And you guys can see how big of an effect this has on the Fed and yields, which ends up affecting the markets. So what happened with CPI as a quick reminder, okay? We had core CPI month over month for the month of December at 0.2%. That was aligned with expectations. For core CPI year over year, it came out at 3.2%. That was a little bit below expectations, not bad whatsoever. And that's actually a slight decrease compared to what we saw before, so that's a good sign. But then for all items, CPI month over month, it was at 0.4%. That's aligned with expectations technically. And then for CPI for all items for the month of December year over year was at 2.9%. That is aligned with expectations, but it still is a slight increase compared to what we saw before. Yes, the market was expecting this, and it wasn't really enough to get the market to dump. And as a result, the market did the opposite. Now, why did the market pump like this? It's not just because of the data, guys. And that's the thing you have to remember about the way the market moves. Okay, everything was basically aligned with expectations or below. Everything was decent despite the slight increase in all items CPI year over year. But the reason why the market pumped is because of the algorithms that dictate this and because of the shorts that were piling in. Because it was due for some kind of squeeze when we saw so many tickers at their supports, from Meta to Microsoft to Tesla. The market was at supports, and the buyers came back and defended as a result of that. They used this data as an excuse to really squeeze these shorts. That's what they do with all this data. That's why we see big swings on FOMC and factors like that. So it's not solely just the data, but what these market makers are doing in the back end. And if anything, the market liked the data, so we just have to accept it for what it is. A very important lesson to remember about the stock market is that we can't be too biased and we cannot get too emotional over our biases. A lot of people think the market has to crash this day, it has to dump this day, it has to pump this day, and sometimes it won't even do what you expect because, once again, it's very manipulated and there's other factors that dictate it. That's why you want to be very, very open-minded. You want to trade like water. You want to be very, very adaptive. No matter what ends up happening, you have to be open-minded to anything, no matter what they end up trying to throw our ways. So with that being said, what happens for tomorrow? The answer is, as time goes on, we basically have initial jobless claims coming out at 8:30 a.m. Eastern Standard Time. So some jobs numbers, then data from the Philly Fed. We have the Philly Fed business conditions. We're going to have some employment numbers, new orders and prices paid data coming out for the month of January. So get ready for all of this. There's going to be some volatility with that data coming out, especially because of the employment numbers. So get ready for them 1 hour before market open for tomorrow. Besides that, everything else is going to be quite minor, so just keep that in mind. As far as CPI goes, just as a reminder, this is what the chart looks like. So for all items without food and energy, this is the maroon looking line right over here. This came down just a little bit. This came down just a bit for core. This is the first time that happened in the last couple of months. But there's a big but. There was also a little bit of an increase that happened right over here. We saw this slight increase in all items CPI because the trend is still not the best. And we'll have to see what kind of reaction we get as a result. The market was expecting this increase, so that's the reason why it still managed to rally. What else fueled the rally of the markets is this news right here. I'm not going to go over every individual one, but I just want to say in a nutshell, the majority of big bank earnings were positive. They were good. They almost all of them beat on expectations on EPS and revenue. We saw BlackRock of all things do really, really well with their assets under management at one of the highest it's ever been, and they beat on EPS and revenue. We saw Citi talk about how they're going to be looking for a nice profit for 2025, raising their guidance, and we saw Goldman Sachs do the same thing. So good earnings from the big banks is what helped fuel this market rally as well. This helped to some extent. And then tomorrow we have TSMC announcing earnings, United Health Group, Bank of America, Morgan Stanley, and US Bancorp. So get ready for more big bank earnings for next week. It's going to be very, very important. Get ready for all of that. Now, as far as the market sentiment goes, right now, fear is still present. We were very close to extreme fear. Now we're just at fear. This is going to start to shift this way the longer the market holds these levels. On top of this, momentum was at extreme fear. Now it's trying to bounce. So the S&P 500 bouncing, it could lead this to become less fearful as we see another potential rally that could be starting. The market was at extreme fear. People were shorting the market. People were buying puts up like crazy. That's why the ratio kept going up and up and up. And as a result of people buying puts, shorting the market, now we're seeing these shorts getting squeezed, at least for the time being. So the shorts are piling in, and now the buyers are back who are squeezing those shorts. The VIX is back to neutral. It's starting to dump right over here. If we lose our 50 daily moving average around the 16.3 area, this could continue to fall. So just keep that in mind, guys. The VIX is showing some weakness. So what do I see for the charts? What is my opinion, at least moving forward? Let's talk about all of these. So just know that right now, the market's looking quite promising. We made a nice break of our key EMAs. SPY managed to get back above 590. And I told everyone there's going to be a big move that's coming. Now, there is still this head and shoulders that's present. Okay, there's a left shoulder, a head and a right shoulder. But for now, we're not going to worry too much about that. We're going to be more focused on the shorter term. And the shorter term is telling us we're about to test this resistance right over here. So there's a big test tomorrow. If we can break this resistance, I think SPY could squeeze more. If not, we could be dumping. So tomorrow, expect a big test right here around 594. If we don't break this, we're going to be looking for a move back down to 590. And we'll have to see if we hold support right over there. If 590 fails, the SPY could be dipping back down to 588 and then 584 as our supports. If we hold and manage to break above 594, I think SPY could be trying to get back up towards this imbalance over here, taking us up to 596, if not 597.5 in that range. So 596 to 597.5 is coming next if we break 594. If we don't break it, we could be coming back down to 590, so make sure you watch these levels very closely. But looking at the 4-hour, it does look a bit more bullish as we've gotten this nice break above these resistance areas. And then the daily chart, okay, it's looking more promising. I see this big gap over here, so that's the only thing that concerns me. In case we do get a break below like 590, we could return there. But for now, we're at resistance, and we are technically favoring upside a bit more looking at the PPO right here. So this could be suggesting we're going to continue to push all the way up to about 596 to 597. So in my opinion, here's my opinion, I think that we favor upside a bit more because we've broken this resistance. There's a break of structure that's happened right here, and we're going to be testing this resistance again, but we're looking very strong. So this chart is going to be favoring upside if we could break 594 tomorrow. And as of right now, it does favor that direction, especially as we're getting more volume that's coming in, especially at the end of the day. So SPY favors a test of 594. If that breaks, we're going to be going a lot higher to about 596 to 597.5. If we can't break that, we go back down to 590, but this chart is technically favoring upside a little bit more. QQQ has the same setup, almost exactly the same. Why? Because we have this blue trend line of resistance. We rejected many times near the blue trend line, so we're going to be watching this big test tomorrow. Notice we were very resilient. We held above our key EMAs. If you reject off 516.5, we're going to be returning back down to 514 and then 512. And then if we lose that, we start dumping back down. If we manage to break past 516.5 or above, we're going to be looking for a big push for essentially these next resistances. So this next level right here is what I'll be watching for, the 520 range for the QQQ, then eventually 522. If we manage to break past very close to 517, I'll be looking for essentially 520 as our target. So looking at the current setup, we look bullish as we're breaking out right here, and this trend line could be broken looking at the 4-hour time frame. On the daily chart, it looks bullish, but we're still at resistance, so we have to see if we can break 517. This chart favors and wants to break it to get back up to 520, so we'll see just to be safe. So watch to see if we break 517 to continue, but the chart looks a little bit more promising. For the IWM Russell 2000, the 4 hours stuck between 223 and essentially 226. So we're in that range, but we're looking quite good so far because of the fact that we are still continuing to push. So on the Russell, if we lose 224, we're looking for a move back down to 222. If we manage to break 226, we're going to be pumping a lot more. Looking at the 4 hour, I think there's a lot of life that's forming here. As long as we don't lose support, we could continue to push back up for essentially 226.5. I also think that we have a nice divergence that's formed, so this technically favors upside a bit more. What I think is going to happen tomorrow is that we are going to see an attempt to push higher for essentially 226, and we'll see if we reject off that again or not, but I just want to say we do favor upside a little bit more looking at the Russell. For ES, looking at a couple of the futures out there, we have resistance at 6,000. It's a little bit tough. So we'll have to see if we could break this or not tomorrow. If we don't break it, we're looking at this zone right over here. This main support is going to be very close to about the 5960 area. So if we dip like this, this is going to be a little bit more bearish if we end up losing 5960 to turn back down to 5930. And if we break past 6,000, we're looking for an attempt to push back up to about 6,020. So it could go either way. My gut tells me what's going to happen is we might see a little slowdown tomorrow on ES before it attempts to bounce here, but we need to break 6,000 to remain bullish to fill this imbalance up here at 6,030. So it's going to be a big test tomorrow. I think we get an initial sell-off before it tries to bounce again, and we'll see if we can try to break 6,000 or not. If it doesn't break that, we return to 5960 and 5930. Back down to our 20 and 50 EMAs. But my gut tells me it's going to try to break this. It's still looking very strong with this big green bar, and there's no sign of a rejection yet. It's still holding up quite well. For NQ, we have a tough resistance at 21,422. If we break that, this is going to squeeze back up to about 21,500 plus. If we don't break that, we get a rejection. If this can't hold above 21,328, then we could be dipping back down to 21,234. So I think that because we have a tough resistance here, we could be dipping a little bit. Might be a small pullback tomorrow morning on NQ. Then we have to see if the buyers defend and we try to break past 21,400. If we break that, we will continue to pump. So yes, there will be a squeeze for the markets if we break resistance. This will depend on what kind of reaction we get. Now, just real quick for crypto, just know that Bitcoin has resistance at 100,000. We have a nice accumulation, which typically leads to us hitting these highs up here. So what could be happening is we might see a little bit of a retracement right here to our key fib level, back down towards the 98,000 or so area before it tries to bounce back up to 102,000. That's a strong possibility. Anyways, for the individual tickers, let's now just talk about the rest of these. We have Nvda to start things off. It's looking a little bit more bullish. There's going to be a big test tomorrow. I think it pushes another point to point and a half. So I think what's going to happen is tomorrow Nvda does this. It kind of retests 135, then bounces for 137.5. This is going to be our 20 and 200 EMAs, our 50 and 200 EMAs, excuse me. If we break this, we're going to be launching for 138 to 140. If we don't break this, we come back down towards 133. So it all depends if we could break this or not. We formed a very, very nice looking double bottom on it, and the PPO is looking quite strong. So we're favoring 138 to 140 is a more likely possibility, but that depends if we could break 137 or not. I think that we most likely test 137 tomorrow, and we'll see if we break that or not on Nvda. So make sure you watch these levels just to be safe. For the big one, Tsla, I think we're doing a great job at holding up. We managed to close above this resistance, but we'll have to see if we can hold above it. So we had this tough resistance that was holding Tsla down for the last couple of months. We'll see if Tsla could hold it. I think that we're doing a good job at trying to break it. Typically, what you want to see is a little back test and a bounce. So it might happen to Tsla something like this where we get a back test of this support right over here around the 420 area. And as long as we hold 420, we could be looking for a shift back up towards that 440 area. I think it looks very promising. It's doing a great job at holding up as long as we don't lose 420 and 414. We are favoring a dip and a bounce and an attempt to get back up to about 433 to fill the gap, and eventually back up towards 440. It looks bullish, great day, and typically when you have big days like this, we are more bullish. As long as there's no bad news, I think Tsla has a lot more potential for the way that things are going. So good job by Tsla and its traders. We're looking quite promising. For Apple, it looks a little bit promising as well because we're trying to push right here. There's a nice left shoulder, head and right shoulder for me. We were talking about this yesterday. As long as we don't lose 237, if we lose 237, we're looking for a move back down to 235, by the way. But as long as 237 holds, we're looking for an attempt to get back up to 240 as the most likely possibility. Apple looks a bit more bullish to me. Netflix is looking promising. It has a nice double bottom divergence that's forming. We want to break past 500 or 858, excuse me. If that breaks, we're looking for 868 next. So I see potential in this chart as long as we don't end up losing 849. So might be a dip and a bounce back up towards where this imbalance is, taking us up towards that 868 level is the most likely possibility. As long as we don't lose 849, we favor the upwards direction. For MSTR, we look bullish, making this looks like an inverse head and shoulders. I was talking about this yesterday, right? We have a left shoulder, a head, and then a right shoulder. So this is technically favoring upside. As long as we don't lose 355, I think we could continue to push like this back up towards the 370 area or above. And we have this gap to fill in the 380 zone, so we could be pushing for like the 370 zone. Looks more bullish to me. For Celsius, we look a bit more bullish. We're making higher lows. We have a nice inverse head and shoulders right here. If we could break past 27.6, we're looking for an attempt to break out for higher levels such as the 28. So watch and see if that ends up being the case. If we end up losing 26 flat, we're going to be dumping. So we have a nice inverse head and shoulders here. We could be trying to push for 28.5 plus, especially where this gap has to be filled. So 28s could be coming for Celsius. I think it looks a bit more bullish to me. For Supermicro, we also have a nice triple bottom that's formed. It's forming a nice accumulation, but we need to break past 31.62 to start pushing for 32.4. Looks somewhat more bullish to me. Palantir is looking very promising right now. I talked about yesterday how I was expecting 68. Lo and behold, my prediction was correct. So from what I'm seeing, nice inverse head and shoulders. As long as we don't lose 67.87, we favor a pushback up to 70 plus. So I think 70 is likely coming all the way up to 70.89, which is where our 50 EMA happens to be. As long as we don't end up losing, by the way, 67.87 and then 66, we favor upside. As long as these don't fail us, we favor a bigger push. For Rivian, we look a bit more bullish. If we break past 14.02, we're looking for an attempt to push back up towards 14.5. If that breaks, we're going to be looking for a very, very big pump. If SoFi continues to break out right here, it's looking more promising. I could be looking for an attempt to get back up towards 16 flat. The 16s are likely coming looking at this trend. I think it's doing a great job at holding up at least thus far. So watch that very, very closely. AMD looks a bit more bullish. If we break past 121.4, we're looking for 122.5 as our resistance. If we lose 118, we could be dipping, but I think this favors 121 and 123. For ARM, I think we're making a higher low here. We had a low up here. We came up, made a higher low. This could be favoring a push back up towards 150 plus. Looks very, very promising. If 150 breaks, we're looking for 153 or even above that. If we lose our support right over here around this 145 area, we could be dipping back down to 141. This is favoring upside. It looks like it wants to be going up to about 150 plus. For coin, we look a little bit more bullish. This depends on Bitcoin, of course, but I think this is looking quite good. As long as we don't lose 269, we favor a push for essentially 278, then eventually back up to about 283, so we favor upside. Amazon looks a bit more bullish as long as we don't end up losing 221. I think this chart is favoring 225 plus. For Meta, we have this nice accumulation right here. We're looking for support at 606. As long as this holds, we could attempt to bounce back up to about 620. We're also forming a very, very nice range right here. If 606 fails us, we dump back down to about 595. And as long as that holds, we could be bouncing for essentially 625. So keep that in mind. Microsoft is looking a bit more bullish, forming a bullish divergence and a double bottom. If we break past 428, we're looking for an attempt to get back up to about 432. And if we lose 424, we're looking for a dip back down to 420. I think this is favoring 428, but we have to break that for confirmation. So we'll see if that breaks or not. Google looks a bit more bullish. If we break past 198, we're looking for an attempt to get back up to 200. Overall, we have a nice accumulation here, a nice range. I think we're doing a fantastic job. GameStop is looking a little bit weaker. We could be retesting 27.5 or below. AMC looks like it's going to be testing 3.6. If that breaks, we're looking for an attempt for about 3.8, but it's not making that huge of a move compared to how low it is. GJT could be trying to push back up to 42. It's getting a bounce thanks to CPI. The VIX has a head and shoulders. It's approaching support right here around this 15.7 area. If that fails us, we have a gap to fill back down to the 14.7. This is still technically favoring it's still favoring downside, which is bullish for the stock market. The 10-year is coming down, which tends to help the markets turn up. This is a good news because the yields are slowing down a little bit. And then also the dollar is very flat here. We'll see if this gets a rejection on its at resistance at 109 109 flats. So we'll see what ends up happening from there. So the market looks like it wants to push more. We do have some tough resistance to test on SPY, the QQQ, Tesla, and the others. But as of right now, the charts do favor upside a bit more, and it looks like we want to go even higher. With that being said, I thank you all so much for listening. So please have a good rest of your day. I'll be back with another updates tomorrow before market open. Until then, I wish the best for all of you. Don't forget to watch your levels closely, and we'll see how the levels end up panning out for tomorrow. Thank you for listening, and peace out.